Stocks resume their climb after a shaky start with midcaps in the lead. Consumer durables and IT are the prominent gainers, while energy and financials drag. Hindustan Unilever has a slow-moving quarter with no volume growth and moderation in consumption seen ahead. But Pidilite beats estimates on volume growth, riding on a strong traction in the B2B business. Coforge and Persistent Systems log in a strong growth and guide for continued growth momentum in the foreseeable future on the back of a strong order pipeline. Both stocks jump. L&T's JV with Spain's Navantia has been disqualified from the rupees 70,000 crore P75I submarine project for failing to meet the technical criteria, sources tell CNBC-TV18. Mascot Dock and Thyssen Group Marine are the only qualifying bidders left, but a final decision is awaited. Reliance Industries inks an MOU with the Maharashtra government to invest over rupees 3 lakh crores in the state across sectors including new energy, retail, hospitality and high-tech manufacturing, with a potential to create 3 lakh jobs. Hello, good afternoon. You've tuned into CNBC-TV18. You're watching Business Lunch with me, Vinny Motiwala. A quick look at what the markets are doing today. The markets are managing to hold on to gains as of now is what we saw coming in. So yes, Nifty holding on to decent gains of around 0.4% of trade, almost near the day's highest point. Started in the red and then we saw the jump up coming in. Hope this sustains in the second half of the trading session as well. Top contributors that are coming in, we have names coming in like M&M, Infosys, ITC as well as Sun Pharma in the top movers. Drags a bit coming in from the private banking side. So we have HDFC Bank, Axis Bank, Kotak Bank as well as Reliance also, which is under pressure. So that is why a bit of a pressure coming in on that front. Mid and small cap are managing to hold on to good gains. That is outperforming the benchmark indices. So clearly both of them holding on to gains of almost 1 to 2% in trade. Now a Nifty bank, let's pull that up, right? We saw all those contributors in the Nifty 50 were coming in from the private bank side, which are the top drags today in terms of top contributor drags. So that is what the pressure is coming in on, and that is why Nifty Bank is down 0.1% in trade as well. IT and Pharma, those are the top sectoral gainers. We had Infosys among the top Nifty 50 gainers, so Nifty IT also overall. Plus, do not forget, a lot of IT companies have reported their numbers. Mid-cap IT names, when you look at it, Coforge, Persistent, they're managing to hold on to good gains in terms of earnings movers that are coming in. So Persistent, Coforge. Other than that, in other sectors, we have Zensar Tech, Go Digit, Pidilite among these movers. These are all earning movers and they are managing to see very strong gains in today's trading session. But yes, those were individual names in terms of stocks. That's how the market setup is looking like. But let's start the show and shift focus on HDFC Bank. Now, they reported a steady set of numbers in Q3. Yesterday, we saw them coming in during market hours. Net profits grew by around 2% on a year-on-year basis. Net interest margins came in at a 4-quarter low, with slippages up by 12% on a quarterly basis. Let's listen into what the management actually had to say in terms of the company's earnings and what they highlighted in the conference call.
We are in the midst of a very challenging macro environment. With tight liquidity conditions, signs of moderating urban demand, a tepid private capital expenditure programs, volatility and depreciation of the Indian rupee, capital outflows from equity and debt markets due to uncertainty around the new U.S. administration. We are seeing some amount of rural demand picking up. The government spending is picking up after a slow momentum in the H1, the first half of the year. We see continued strength in services exports and a gradual moderation in inflation. But we've been able to maintain a very tight leash on the cost. Our cost growth has grown 7% year on year, which means that we have gained some amount of productivity gains there.
And moving on, Reliance Industries had inked an MOU with the Maharashtra government to invest over 3 lakh crore rupees in the state across different sectors, which will include new energy, retail, hospitality and high-tech manufacturing, with the potential to create 3 lakh jobs. Now, here is what Anand Ambani and Maharashtra CM Devendra Fadnavis had to say about this.
It is an extreme honor and a moment of pride for me and for RIL as we embark on this remarkable MOU with the government of Maharashtra. RIL has always been deeply committed to the idea of New India under the visionary leadership of our Honorable Prime Minister Shri Narendra Bhai Modi ji. As the largest business group in India, we are spread across the country, furthering our commitment to build a great nation. In this regard, our 3,05,000 crore MOU spread across new energy, retail, hospitality, green power, high-tech manufacturing is the step in that direction.
विशेष रूप से इसमें से एक बड़ी इन्वेस्टमेंट ये चूंकि सेवा क्षेत्र में जा रही है, तो इसके कारण बहुत बड़े पैमाने पर इससे नौकरियों का सृजन होगा, जॉब्स का क्रिएशन होगा और करीब-करीब 3 लाख जॉब्स का क्रिएशन ये इन्वेस्टमेंट करेगी, ऐसा एक प्राथमिक अनुमान है.
And with a little bit more than a week left for the union budget, sources have told CNBC-TV18 that the budget will look to front-load capex with focus on infrastructure development, healthcare and EV sectors. Timsi Jaipuria is joining with us to give us the expectations and what is she picking up from her sources. Timsi.
Well, that's right. What sources indicate that the upcoming budget is likely to front-load capex with focus on infrastructure development, healthcare and EV sectors. Government believes that front-loading of capex will create jobs and thus boost consumption. Not just this, sources further added that budget is likely to boost road and highway construction, rural road construction. It is also going to allocate resources to accelerate railway track expansion. More funds will be allocated towards primary and secondary schools, colleges. Budget is also likely to enhance funding for creating and expanding AIIMS health clinics. Also, there will be a focus on funding for battery charging stations, building AI infrastructure. The budget is also likely to focus on funding capacities which need expansion in terms of semiconductor manufacturing, and the budget is also likely to support domestic shipbuilding operations. So now what we have to see is what Finance Minister Nirmala Sitharaman announces when she reads her 8th budget speech in the Parliament on 1st of February. Back to you.
And out of the budget on the Feb 1st, we spoke to Shantanu Sen Gupta of Goldman Sachs as well as Pranjal Bhandari of HSBC. Sen Gupta spoke about the fiscal drag in the deficit rising, while Bhandari spoke about the 3 main areas that the government must focus on in the upcoming budget. Listen in.
Bigger point is that you might want to shift around expenditure a little bit from capex towards welfare or transfers, but the net fiscal impulse on the economy is still going to be negative, or there's going to be a fiscal drag if you're going to consolidate the deficit. And I don't think there's any question, at least in our mind, of whether the government will be consolidating or not. I mean, there's no question of expanding deficits at this stage of the cycle. Even if it is 4.7, for instance, Lata, from 4.9% of GDP this year, you're still going to have a fiscal drag because you're consolidating the deficit. So unless you go towards like 5+% of GDP, the net impulse on the economy is negative.
One, macro stability, stick to your fiscal consolidation path and hand over the growth job to RBI. And I think RBI has the space given inflation is coming down a lot. Our January inflation forecast is 4.2%, quite low compared to 6.4 just in September. The second one, I think, is manufacturing jobs. Great opportunity. Again, supply chains could be getting rejigged this year. In Trump 1, you did not become a magnet for mid-tech FDI. Try and do that. But that will want you to be, you have to dare to be different. When the world is getting protectionist, don't increase import tariffs, actually reduce some of them. Go sign FTAs with the US and other advanced economies and let the currency be flexible. And the third one is revival of capex, because over the long term, that's the only source you have of creating capacity and jobs. Okay. So I would say these 3 should be the main pillars of the fiscal on February 1.
And in a big relief for WhatsApp, the National Company Law Appellate Tribunal has stayed an order by the Competition Commission of India to halt the user data transfer to parent firm Meta. Ashmit is joining with us to give us more details on this one. Ashmit?
Well, at the heart of this issue is WhatsApp's 2021 privacy policy. That is something that the CCI had taken an exception to, and importantly had passed an order whereby a penalty had been slapped of about 213 crore rupees, as well as a very pertinent and important direction for WhatsApp to stop sharing user data with its parent company, Meta. Now, this is at the core of the WhatsApp privacy policy. This is at the core of their business model here in India. This is what they had argued before the NCLAT as well, that this privacy policy has been in effect since 2021, that there has been no stay granted by any court in India, either by the Delhi High Court or by the Supreme Court, that there is already a framework in place for governing privacy regulations, that is by way of the DPDP Act, and therefore there is no reason for the CCI to pass such orders. Now, it is taking that order into consideration that the NCLAT has granted a partial stay, and this comes as a huge relief. The NCLAT has stayed the CCI direction, which had barred WhatsApp from sharing user data with Meta. What this essentially means is that WhatsApp will be at liberty to continue sharing user data, to continue monetizing user data in one of its largest markets, India, especially with its parent company, Meta. Also, meanwhile, the NCLAT has held that there is no stay, that the DPDP Act is in place, and therefore there is enough grounds, there are enough protections in place as far as the users are concerned. Having said that, the NCLAT has not stayed the penalty component. WhatsApp has been directed to pay 50% of the 213 crore rupee penalty within 2 weeks' time. So that's the sum and substance. The big relief, of course, is that WhatsApp can continue to monetize Indian user data and continue to share it with its parent, Meta. Back to you.
Okay, Ashmit, thank you so much for that. On that note, we're going to take a very short break, and after the break, we'll tell you how Stargate project is leading the friction between two top tech honchos. Welcome back and thanks for staying tuned into Business Lunch on CNBC-TV18. Let's move on. Microsoft CEO Satya Nadella spoke about his investments in the Stargate project through OpenAI and also clarified his position on the tug-of-war between AI and job cuts. Listen in.
Microsoft is investing $80 billion in capital each year, and this year we're investing. And I'm not particularly in the details of what they're investing. Look, all I know is I'm good for my $80 billion. I'm going to spend $80 billion building out Azure. Customers can count on Microsoft with OpenAI models being there everywhere in the world, serving OpenAI models and other models. That's, I think, what I know. AI does really help reduce the drudgery in a lot of our work. In fact, talking about software development, my first belief in all this technology came when I saw GitHub Copilot and what it did, because the joy of programming was something that was brought back because of AI helping me with the task in hand. So I think what AI does, quite frankly, is simultaneously reduce the floor and raise the ceiling for all of us. So that means the expertise level inside of an organization goes up, productivity goes up. I think there's going to be real new skilling, real changes in jobs, even in software engineering. At LinkedIn, for example, we've changed what used to be front-end design product into full-stack builders. So think about it, right? So the role itself, the complete scope and scale has changed. That, I think, reimagining of the labor force and the scope and scale, I think, is what's going to happen.
Meanwhile, Elon Musk too has jumped into the Stargate bandwagon a day after Donald Trump announced a $500 billion investment into AI. Billionaire Elon Musk has claimed on X that the tech giants like OpenAI don't have enough money to invest in an artificial intelligence infrastructure. The new plan, dubbed the Stargate project, aims to turn the US into an AI hub. Later on, we had OpenAI CEO Sam Altman, who replied to Elon Musk, asking him to put America first over his personal concerns regarding the plans impacting on his company. And on that note, we're going to slip into a short break. But as we slip into the break, here's some good news coming in for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen. Welcome back and thanks for staying tuned into Business Lunch on CNBC TV18. Now let's move on. And speaking to Shureen Pan, the CII panel members spoke about India's growth story and the country's economic growth at Davos. Listen in to what they had to say.
This is the first time that because they want to replace, build newer infrastructure because of new technologies, what have you, it's a global capital investment cycle. And that, it's a question of how we as in India can take advantage of. In addition to the capital investment cycle, there is a huge supply chain opportunity of making in India and exporting to the world. And really the question is, how can we, I don't think we are doing enough as a country. We can do more. And the kind of growth which we are showing today can be much better. And the opportunity available, which we can hear every day, and it's really up to us to see how we can take advantage of that.
The testaments to India's infrastructure of people strength is the GCCs. Look at that. We have almost 2,000 GCCs. When I spoke to people, CEOs from the US, they said 20% of their workforce is in India. And it's not for grunt work. It's for really good capability, so innovation. So more of that happening, then we'll get those data centers. We'll need them. So I think India also has that. While we're picking up the challenges of consumption, we're picking up the story of this, we do have huge opportunity in showing the world that we have the most skilled people.
India and the US have now, with this CEPT agreement, moved closer to working strategically in defense. So as the US is going to realign its position with NATO, whatever that may be, I see a huge opportunity for India and Indian companies to also be a player in the supply chain to these geographies in NATO. Obviously, being an Indian company, we have to, be cognizant that it cannot be to the detriment of some of our long-standing partners, but the capability exists and that we can be a player globally.
And in other news, the government sources have revealed to CNBC TV18 that India is examining the impact on bilateral trade between the countries on the back of President Trump's America First policy. Abhimanyu is bringing us more updates on this front.
India is examining the America First trade policy for any impact on bilateral trade and would assess if something needs to be done in case of any negative outcome. Government sources have indicated that the White House directive to the U.S. trade representative is a positive development for countries like India, where the USTR can identify countries for negotiating agreements on a bilateral or a sector-specific basis. Sources informed that talks with each ministry are underway to ensure they are informed about the situation, adding that a country may withdraw from the Paris Accord but still participate in green energy initiatives. The government is also awaiting confirmation of appointment of key trade officials in the US, post which discussions between both the sides would take place. The US is India's largest trading partner, and India has already indicated that there are no plans for use of any BRICS currency, though the use of rupee is being strengthened in bilateral trade with several countries to reduce exchange rate risks.
Moving on to some updates coming in on the domestic front, at least 13 people were killed after being run over by the Karnataka Express in Maharashtra's Jalgaon on Wednesday. The incident occurred when passengers of the Pushpak Express who had stepped onto the tracks following a rumor of a fire were hit by the Karnataka Express. Maharashtra CM Devendra Fadnavis and Prime Minister Narendra Modi condoled the death tolls and said that the authorities are providing all possible help to the injured. Okay, and with that, we're absolutely out of time on this edition of Business Lunch on CNBC TV 18. Thank you so much for tuning in. Up next, your Midcap Radar.